We've got RBL Bank in focus next. It's looking to raise 1,211 crore rupees through the market via an IPO. It's been a while since you had a private bank go public, perhaps in excess of 10 years. You've got a price band of 224 to 225 for the issue. Vishwavir Ahuja, Managing Director and CEO at RBL Bank, joining us on the phone line from Ahmedabad. Thank you very much for joining us. I think we're going to take this opportunity to let our viewers understand, the business at RBL. Would it be fair to say that the focus as it stands today is wholesale banking?
Good afternoon to your viewers. The focus of the bank actually is across the business spectrum. We are actually a full-service bank, what is more commonly spoken of as a universal bank. And therefore, we have all the various business segments, the wholesale, which is the corporate institutional bank, the commercial, which is the SME bank. In addition, we are a very active and a strategic player in the financial inclusion, development banking, and agri financing space. And of course, finally, we have the retail banking, which is in more common parlance, what is known as retail banking, which is more modern style retail lending across the various range of products. So all I want to say is that we are an end-to-end full-service institution. 60% of our current lending book is on the wholesale side, like you mentioned.
Yes.
Yeah. So, and 40% comes from the other segments. However, over time, while all segments are growing handsomely, it is the non-wholesale portion that is growing faster. And therefore, the next 3 or 4 years, you should see the proportion of the two types of businesses come into more balance with each other.
Okay. Again, sir, for the benefit of our viewers, if you could walk us through the most recent numbers. And again, I would put that the growth has been very strong at RBL, but perhaps challenges for the profitability to keep pace with the growth?
Yes. If you take the bank, what it was 5 years ago or more, I think we've come a long distance. Yeah, the bank has grown over the last 5 years from a very small base, a balance sheet base of less than 2,000 crores. Today, it is in excess of 40,000 crores. And the profitability of the bank has also grown in similar proportions. And if I may say, all other various parameters are also, sort of working out in tandem or in consistent with this kind of growth. Even as we talk, now that much of the investment program of the bank, has been accomplished over the last few years, and the various business engines are now in place, and each of them are now sort of building out and growing nicely. We expect that the revenue and the profit traction and the related momentum to also, continue to sort of come through. Yeah, I would say in some senses, even more handsomely. So to answer your question, when March 16, which is the year that has gone by, we closed at a balance sheet size of just under 40,000 crores and advances of approximately 22,000 crores and net profits after tax of 293 crores. So that is how it was.
Right.
And in the current year, we continue to grow, very well.
So, to what extent can you, share your outlook on NIMs? Again, there's a fair bit of interest on that aspect, and I can understand your hesitation to get too specific, but broadly speaking?
No, I'll answer that question. Our NIMs historically, or even for the past year, have been a tad over 3%. And our asset quality, which I should, sort of talk in consonance, our gross NPA has been just at 1% or maybe 0.99. So as we sort of continue to grow the business and the balance sheet, I would expect, like I said earlier, across the businesses, the revenue traction is in fact building up even more nicely because all of them are now contributing, all the various businesses. And much of the investments having been made already in the past years, there is the expectation that the financial and operating leverage effect will in fact kick in even more strongly, and whether it is NIMs or ROAs or ROEs, all of them should see, further improvement, in the current year and going beyond. Having said that, we expect to continue to keep a tight rein on our asset quality, and therefore, we believe that, things will work out then.
Okay, it's, my job to put out there all the questions that investors could have, and which one culls out while looking at various analyst reviews is that although there's, the distribution has not been expanding very fast, yet the cost ratios are pretty high. How would you answer that?
No. On the contrary, if you go back 5 years again, the cost-income ratios were in excess of 80%. And it was also a bank which was starved of investment across the platform. So if you take a situation where, the bank was as small as 2,000 crores in size and today is 40,000 crores, and underinvested, in fact, in every category, whether it was technology, whether systems, controls, product, services, whatever it may be, risk management. The point here is that we have, through this period of time, not only invested, across the platform, we have also, if I may say, generated, the revenue from across the entire spectrum of banking services, such that the operating leverage or the cost-income ratio has come down steadily every year. Today, March 16, it was little over 58%, and again, as I said a little earlier, trending down again every year.
Right. Okay. Good to get that clarity, sir. IPO proceed deployment, what's the plan?
So, the deployment of the IPO, you mentioned earlier to the audience, it was about 1,200 and odd crores, of which, the new money is approximately 832 crores. And, it takes our capital adequacy from the current 12.9% as of March 16 to a little over 15%. And essentially, it is going to be used to, to grow the business and the balance sheet of the bank, again, across all the various businesses.
Vishwavir Ahuja, thank you very much for joining us this afternoon here on NDT.